Such a beautiful instrument made for pretty much all traders, whether you're a swing trader, scalper, intraday position trader, whatever it is. There's something in here in this Dom that's for every single participant to execute off of to refine your risk reward. If you are looking to learn the Dom, this video is going to be about an introduction into it. It's nothing going to go into the fundamentals of what you can use in the Dom, but more or less what all these columns represent, what it is the Dom can provide, and how that aligns with benefiting you as a scalper, intraday trader, potentially a swing trader. So let's get jumped into it. So each one of these are three separate DOMs. So to start at the very beginning, this is one DOM here. This is the S&P futures DOM. This is the Dow DOM, and this is the NASDAQ DOM. I have all three of these as a correlation because all these three are intercorrelated in their own way. They have underlying stocks in which they all overlap, and the underlying weakness or strength in which individual one or all together helps me provide reference for entries or trade management. That's for a different video, but just want to clarify that's what these three separate columns are. As they all look like they're all the same, they're actually not. So starting from left to right, we're going to discuss the DOM on the S&P, which is this DOM here. And the first column here to the left is just notes. These are where I make my annotations. You can see that I have a note that says except below bear. These are little annotations that I make for myself, my reference points when I'm trading intraday. I have a reclaim note as well. So this column essentially is, for the sake of this video, is pointless. It does not exist. This is going to be the P&L for this specific position that I have open on a long column, which again, for the sake of this purpose of this video, will be pointless. All right, so as we go through the columns here, we're not going to go in any specific order of importance, just left to right. This column here represents the volume profile, probably one of the most important context providing on the DOM as they overlay with the prior session volume profile. This essentially is giving you the amount of orders that have traded at each specific strike price. So this is the total volume traded at each specific price. So at 891, there was a total of 3,789 contracts traded. So this one will tell you that as a collective, not only how many contracts were filled or traded within this specific price, but also where the value is within the entire session as the price of the asset is trading. So anything that's divided into purple above, this is the balance of price, essentially where most of the transactions have occurred during this given session, during this current market open from that green profile there, that green line. So from the start of New York Open, that is where the majority of transactions have happened. And as we've traded lower, you can see that there's been minimal price traded. Below that value area, this is where price has tapered off and least amount of participation has occurred. Now, volume profile has its own context. This is just primarily giving you the amount of contracts traded and then more prices in correlation to the volume profile. Very important, but that's another video for another time. And then the next column over is the price of the asset for the S&P. I only have three of the numbers shown. I don't need to see the exact price. I'm only really interested in the last two numbers since I'm intraday trading in and out. And I have a structural chart to show me where price is in relevance for the bigger picture. So I really want to minimize the amount of information I have for this just to save space. And this is essentially just showing you the price as it's currently traded at that specific point in time. So the center will always be the price of the asset. This, for example, here on the Dow, and the same thing with the NASDAQ. And then the next column over will be the resting limit orders for the bid or buys. So all the resting limit orders on the buy side are sitting here on the blue column. These are essentially all the bids of the market, limit bids. So if you were to be participating on the order book, these are going to be limit buy orders. Okay, they personally for me don't have any weight. I don't care about limit orders that are sitting on the market. Those are just advertised price, essentially just orders waiting to be filled, but they have no intent to be filled. Sometimes those orders can sit there for a period of time and then they can just be yanked away by whether an algo or someone changing their mind and deciding to remove their limit orders. So I don't put a lot of specific weight on limit orders. I do like to see limit orders start to pile in as we approach certain areas of interest. And pile in, I mean, as a collective, orders start to sit on the order book more than one strike price at a time as we approach certain areas of interest, whether that's a value or high, value or low. I do like to see them show up, but I don't really care if they're sitting here when we're trading at balance. Any limit orders in here, it's pretty much noise. And as we're going to skip over the center column, the opposite will be true for this column here. You have the offers or limit sell orders. So this column essentially is giving you all the limit orders that are sitting on the offer or limit sell orders. Anyone who's willing to short or close a position will be sitting there if they're passively waiting on the market, as they would be waiting on the limit buy order. These orders sitting here, these essentially you can understand them as they're not aggressive orders. They're willing to wait to be filled at whatever strike price that may be. And I like to, when I'm entering a trade, I like to see who are the most aggressive participants and how are they participating. I don't want to see passive participants, right? I'm always looking for active market participants, and those market participants are always going to engage in the center column, which is the pit, right? Essentially think of this as the pit. These are all the transactions that are willing to be filled right now, this moment, this price. Aggressively or passively, they will be executed, but nonetheless, in order for any of these two market participants to engage, whether someone's sitting on the limit offer or the limit buy, someone has to come in the middle and engage these two orders. So if there was a limit order sitting here at 80, 89, 75, price is moving. This is a recorded video. But if someone was sitting here at a limit buy and someone was sitting across the way at a limit sell, there has to be a participant that bridges the gap between these two orders, okay? It can only be filled by someone actively hitting market buy, market sell to fill a market limit order. So as we segue into that, this is going to be the most important column for me. I want to see the market participants that are trading actively at the market. These are not advertised orders. These are executed orders. These are real intentional players that are willing to enter the market at whatever strike price is given. And these are the orders that I pay most attention to and can provide you a lot more context as you approach specific areas of interest, whether that's a value or high, value or low, or just a level of interest that you have from a prior day session or a prior day high, week high, whatever, what have you. So these orders passively sitting, I put very little weight to, if any. I put more context into these center columns. These are going to be your best friend. These are going to be the orders that you want to be paying attention to. Okay. Now, this is just an introduction video. This is not a how-to video. So we're going to be going into the last column here. And this is the net delta. Now, the net delta is the other thing that's also very crucial. I put as much emphasis on the net delta column as I would on this column here. The center column, the pit, let's call it, right? Where all the executors are happening, because this is giving me context of how many more buyers and sellers are there at that specific strike price. So as we see there, and as you can see here, as just a little example, you see a lot of limit orders starting to pile in here at the low end of this value area. As we approach it, just kind of mentioned earlier, just briefly, just going to annotate what that looks like as we see an example of price approaching the low end of the value. And you see limit orders stacked up here within a few areas. They didn't get filled, they sat there, but nonetheless, that is something that I'd like to reference. As you can see, there's a stack of 20s, and then a few strike prices, like I mentioned earlier, have stacked orders of about 3 to 4 times bigger than the average lot size sitting on the limit buy. Things I like to look for. Anyway, the delta is going to be a crucial thing that I like to look for, especially as we trade a high or low of an overnight session, prior day high, prior day low, because the delta is exactly here. This is the formula and how it populates. Delta equals the net buy minus net sell. That is the amount of net buying and net selling at any given strike price. Okay, and having a one net buy, one net sell at a one strike price is not enough. You're looking collectively over a series of strike prices. So if, for example, we're trading at a daily low or a session low, like we are here, you want to see as a collective in this general vicinity, a lot of net selling, right? Net selling. This provides you context, a lot of context as to who is participating, right? Participating in this general vicinity. Are they market buyers? Are they market sellers? Well, we can look at the center column and try to come to that conclusion ourselves, or we can just look at the net delta, and the delta will give you a shortcut as to what exactly is going on within all these limit orders or market orders that are being executed at the market at that price. Essentially, instead of having to fixate on how many numbers are being transacted at every single center column, you can just look at the net delta over the series of a few different price levels, and you can get context. What's happening at the low of day? Is there more net selling? Okay. There's more net sellers. Are they being rewarded? Are they not being rewarded? Right? Those are the two questions you can then ask yourself as we approach a key area. Now, those are going to be the introduction into this DOM. This video that's being overlaid here, it's actually, I have an example of how I used this exact column, the net delta, at the high of the value area and at the low of the value area to find a long and short. So I went short here. I went short here based on the amount of net buying that got trapped using the DOM. And I got net long here based on the same principle, but in the inverse. There was a ton of net selling, and I got long here, all in one session. And this video, you can see that I have a long position here at 886. And if I'm going to put the video description here, and at the end of this video, you can see that there is introduction here, reversals, kind of going over the net selling, net short, net long. I'll explain in real time. Just kind of going into bridging the gap between the introduction of this video of the DOM and then putting you into overall what the columns matter, and then how I use these columns in this DOM to execute trades and also manage trades. So if you watch this video, make sure you watch the next one as it kind of builds on these columns and how I use it to execute a short and long trade all within one session.